Hi there everyone and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it is entirely to your particular circumstances and you need to decide for yourself what is appropriate to you. Okay, so it's quite amazing what can happen in a week, guys, right? So we found ourselves down testing the 7200 level this morning. We weren't far off it yesterday on the close, but today's a pretty big reversal to where we were early hours this morning, where our futures were indicating an open around 71.50. So we avoided that open. Okay, so by the time the market actually opened at 10 o'clock today, the futures are already above 72, and then throughout the day today we were able to push up, closing slightly in the green. So there's a few key levels on this market that we're looking at. There's probably a few things to highlight here. The long-term uptrend that we established from after the pullback in COVID has now really broken. Okay, so it looks like we're sort of changing the, steepness of this trend now. With the question of whether this is going to be the top and a bit of a break to the downside or not. So I guess what I'm saying there is, a correction's on the table here. But before I scare you with all that, there's a few levels we'll have to crack through. So 72 is obviously the key level for now. After that's the 200-day moving average would be our next target. If that also breaks, then we're looking for that 10% correction. And 10% correction levels are around 68, 69 at this stage. And that's a big if, right? So this is the thing, and this is what happens when you get a pullback in the market. Especially with quite a strong market we've seen over the last 12 months, you never really know how far the pullback's going to go. Now, there's a lot happening that's causing this pullback. In particular, obviously, a seasonal pattern. Every September, we tend to see a bit of weakness here. But we're starting to see bits of news and bits of uncertainty that's driving the selling at the moment. And it's hard to really establish whether this is the bottom or not. Okay, but I think we'll find out in the next week. Now, before I go into too much of the detail around the reasons why we're pulling back at the moment, let's quickly show the chart of the S&P 500. Similar sort of deal here where the uptrend line has now broken. And just because the uptrend line's broken doesn't mean we're in a downtrend just yet. We look for other technical signals like the actual establishment of the downtrend, which is lower peaks, lower troughs. We look for reversal patterns, which we haven't seen played out just yet. So look, I'm not calling this the top, guys, right? Without a doubt. I think this is a pullback in the trend. I think this is a readjustment in the trend. Especially in the US, that's a very steep trend, guys. Okay. So at some point, you need to see a shallowing of that. All right. So this, I think, is a bit of an adjustment phase. All right, where we will see, we have seen a pullback. Just not sure how much more of that pullback is going to happen before we find a bottom and rebound. Okay, so let's talk about some of the reasons why we're pulling back at the moment. Now, one of the trigger points that started this other part of the pullback this week, it really started yesterday with China's Evergrande potentially collapsing this week, right? So they're due to pay another interest payment. It doesn't look like they're going to make that payment, so it looks like they're going to default. And really, we don't know too much more than that at this stage and where that's going to go. What we do know is they're one of the largest debted companies in the world, right? So that can be a pretty big deal. So it could be a big deal more in the credit market, and then that tends to have a flow-on effect into the equity markets. And just look at the GFC. That's a perfect example. Credit markets froze up, caused a bigger problem. This time around, though, I don't think that's going to be the case. Okay, back pre-GFC, there was less willingness for central banks of the world to step in. Now we've got the bond buying and the rest of that happens. So yeah, look, I think they'll find a way around this, guys. You also could have Chinese government intervention. We're not seeing that yet, but it's still on the cards. So I think one way or the other this will work itself out and won't cause a huge pullback in the market. But you couple this with a few other things going on at the moment, it could easily cause a 10% correction. And that's always on the table here. We haven't seen a 10% correction in the market for a while. And with the uncertainties around Evergrande and a few other things happening in the US I'll talk to in a moment, it is on the table right now. Okay, so just be wary. Okay, yes, we're seeing some positivity in the futures. Yes, we've seen a bit of a turnaround in our market today, but just got to be a little bit cautious still until we get past the Fed announcement. So the Fed is meeting over the next few days. We'll see an announcement from them early hours Thursday morning, pre our market opening. So our market open on Thursday will be reacting to this. It is widely expected that the Fed will start tapering their bond purchasing. Now, this has been speculated on all year. Okay, we have seen a lot of volatility around central bank announcements in the US all year. So look, Jay Powell indicated they might start tapering around early December, but he hasn't indicated at all how quickly they're going to taper and how much. And this is kind of what we're waiting for here. Has there been enough negative data economically to stop him from tapering? We'll soon find out. Is there enough of a case to sort of argue that they need to do it very slowly? Yes. Okay. And I think at this point for me, it's less about whether they taper, okay, because I think they should start tapering at some point. It's really about the message that comes around the tapering, okay. So if the message comes out from the Fed and they're clear and precise and they map out a path forward where the tapering is going to happen very slowly, they're going to monitor economic information on whether they continue to taper or not on a quarterly or monthly basis, and especially the message has to be loud and clear that interest rates will not move anytime soon after the tapering is completed. If we get that type of message from the Fed, I think the market, look, it might be a little bit volatile short term, but overall the market won't mind. Okay, so that's what I'm looking for. If the Fed does taper and they're very vague and they don't give us enough information, that's going to send a lot of investors and analysts out there speculating on what's to come next. So we need a clear and precise message from the Fed if we're going to see a stable market in the short term. The next big thing is the US debt ceiling, and we've seen years go by where the debt ceiling hasn't been raised in time, and the US government has to close down, or certain arms of the government have to close down. Okay, look, we've seen this before. This is nothing new. It does cause a bit of volatility in the market, but usually it's a short-term volatility. So you're starting to see the levels of uncertainty building up in September here. And September is renowned as a bearish month too, right? So that doesn't help, okay? So you got a seasonally bearish month, but you also got levels of uncertainty building up and building up and building up. And that's what's really starting to cause this pullback. So like I said before, even though we're starting to see some positive signs here a little bit, until we get past the Fed and some of these bits of news, there could still be a bit of volatility here, and you could still see that 10% correction on the markets. So just be wary. Still a couple of weeks left of this month, or a week and a half left of this month, and the next week and a half could continue to be quite volatile. Now, Biden's stimulus plan and tax plan is the next big thing, right? So how is Biden going to raise the capital to pay for his $3.5 trillion of spending that he wants to do? And, one thing they're looking at is raising the corporate tax rate. So look, what's that looking like? What's the timelines behind this? What else are they going to look at doing? They're all the other big questions that we're waiting for here. So another level of uncertainty there. All right. So look, the $3.5 trillion is a positive thing. Don't get me wrong. What could turn it negative is how they raise that capital to do it. Okay. So what could be very positive for the people might be a little bit negative for the market, and we're just got to be wary of that. The next big thing, really, what we're seeing locally, which is the big light at the end of the tunnel, is reopening. Okay. So we've both seen a plan out of New South Wales and Victoria here now, where we hit the 70-80% double vaxxed. We're going to get a lot more freedoms back. So, it's predicted for Victoria that that's going to occur around late October, early November, and will slowly come continue to get more freedoms back after that. So look, there's light at the end of the tunnel. We've rapidly hit the 70% mark first dose in Australia, which means there's in Victoria and in New South Wales has now hit 80% first vax, which means we're going to hit those levels second vax very quickly. It's very rare for somebody to get their first jab but not the second. So look, these targets should get hit pretty quickly. And we should come out of these harsh lockdowns pretty quickly in the next few months. So we're going to start seeing some form of reopening. It's not going to be the full reopening. Obviously, traveling overseas, all that sort of stuff will come next year. But there is light at the end of the tunnel. So this is where we can start looking at things like travel stocks a bit more when they pull back, right? They've probably gone a bit too hot in the short term. But yeah, reopening is going to be back on the table. The last thing probably to talk about here from a sector point of view in the markets would be miners. Okay, obviously we've seen a massive crash in the iron ore miners. That's all tied to China capping their steel output coming into the Olympic Games, the Commonwealth Winter Olympics next year. Okay, so look, at the end of the day, it'll only crash so far. We've already seen the iron ore come from 220 US a ton, now just below 100 US a ton. Iron ore futures are closed for today, so we won't see the next lead until tomorrow or Thursday. So yeah, look, it's a space to watch. Anytime the miners do heavily sell off, it's a buying opportunity, guys. Like, iron ore will recover next year at some point. What we don't know in the short term is how far it will fall. So I'm not saying buy today. Just wait. Wait for things to bottom out. Wait for a few bullish signals there. But the miners are something to watch in the coming weeks, months, into next year. There's going to be a really good opportunity. Financials, so banks, 3 of our big banks report early November. They've pulled back in September, which is very typical. Okay, so the Aussie banks, ANZ, Westpac and NAB, you might get a short-term trade bullish out of this in the next few weeks, so just keep an eye on them as well, because they usually run up a little bit into their reporting November. Okay, so there's a few things. There's definitely a lot of stocks starting to line up for trades soon, guys. Okay, this volatility, this pullback we're seeing in the market is a positive thing for short-term traders. Okay, this is fantastic, actually. I can't wait for it to bottom out and get back in. Okay, so don't be scared of the pullback. The key is getting in at the right time. Timing is everything now. Okay, so we've got to find the bottom, see a bit of a signal, be comfortable with what we hear from the Fed, and then we move forward again. Okay, all right, so that's where we're at, guys. Look, there's a lot going on, a lot causing a bit of volatility in the market right now. So just taking the sideline a little bit and just waiting until the volatility subsides just a touch. Get our early signals that we get out of our charts, our technical analysis, and then we'll be straight back in again. Okay, all right, so that's where we're at. Hopefully next week we'll be talking about ideas of what we can trade after this pullback. We'll see how we go. See what comes from the Fed on Thursday. See how this Evergrande situation plays out, and then we'll get our confidence back and get straight back into it. So look, that's where we're at. Thanks everyone, and bye for now.